Check out these tasks that have to get done regarding your taxes by the end of the year. Welcome everyone to another edition of the Highball Advisors Railroad Retirement Whiteboard. My name is John McNamara of Highball Advisors, and today we're going to talk about taxes. So I'm recording this November, beginning of December, and these are things that you want to take a look at to see if you have to get these things done before the end of the year, because once the end of the year's over with, you can't go back and do it, all right? So put up 7 of them, and we'll go through them, and I'll just walk you through it and see how it goes. So for your railroad retirees, you want to complete your RMDs, right? Required minimum distributions. These are the funds that are sitting in your tax deferred accounts that the IRS wants you to take that money out to pay the tax on them, right? So depending upon your age or when you're watching this video, it could be at 72, it could be 73 or 75. Check that out. Now remember, it's important, if you don't make your RMDs, your required minimum distributions, there is a 25% penalty on the money that was supposed to come out. So that's pretty severe. So make sure that those RMDs are done by the end of the year. Next one up, analyze Roth conversions, okay? So these, I talk about these all the time. It's moving that tax deferred money, right? You're working and you were taxed at a higher marginal rate and you deferred that, right, through your 401ks and IRAs. Now you might be retired, might want to look to do some Roth conversions here. So you want to get those done, understand how much income you have in the, for the year, and then look to plan to do your Roth conversions. So remember, the tax rates do sunset at the end of 2025, so they are going to be going up. As of right now, we don't know what else will happen, but you want to take advantage of that when you can move that stuff into tax-free. Tax loss harvesting and tax gain harvesting, very important, right? Maybe some of you might have some tax losses. Take that loss down because maybe you have some gains somewhere else, so you manage those off of each other. Even if you had losses, you can carry forward $3,000 every year until all those losses. That comes off the ordinary income. So if you have some of those losses, maybe maybe take those off and put them down. But it needs to get done by the end of the year. And also take advantage of the, depending upon your income where you are, that 0% capital gains rate. For a married filed jointly for those earning less than $89,000. This is 2023. So that's another thing, tax loss gain and harvesting. Number 4 is complete your charitable giving, okay? So some people will use QCDs and DFAs, so that's qualified charitable deductions. That's basically taking your RMDs and just giving them to charity and then getting the write-off for that. So that way you don't have to pay the ordinary income tax on that. So that's something to think about. And then the donor advised funds. It should be DAF. I put DFA. Donor advised funds, right? Taking a large sum of money, giving it to a donor advised fund, all right? And then you get the tax write-off this year, but then you can distribute the money throughout the years as the years go over. So that's something to think about. Review your contributions into your tax advantage accounts, right? So there's a couple here. Not talking about IRAs, right, because that you can go up till tax time, April 15th. But your HSAs have to be done by the end of the year, right? That triple tax-free, I always talk about those. Those are great. And then your 401ks, right? We say, hey, I want to make sure I max those out if I can, right? So you have to get that done by the end of the year. Number 6 is review your tax withholding and estimated taxes. So depending upon your situation, right, you don't want to underpay your taxes if you're making estimated tax payments. Maybe you had some higher income coming in and you weren't withholding the right amount. 90% of your current year is what you need to be paying on the taxes, or 100% of the prior year. So you don't want to be hit with that underpayment penalty. So check that out, right? Understand what your income is a year. And then finally, the last one here, if you're gifting to the family, right? The gifting limit is $17,000. If you're doing something, to somebody in your family, give them a very nice gift. You can give up to $17,000 and not incur any of the taxes there. So these are the 7 things that come up with the checklist, things that you want to get done. I hope you found this helpful. Feel free to reach out to me if you have any questions about any of this, right? Tax planning is probably the biggest piece of the checklist here, right? Making sure you're taking advantage of everything that you can. And you got to get these things done before the end of the year. You can't turn into the new year and look back, right? The window's closed, so to speak. So reach out to my, schedule a boarding for railroad retirement meeting. We go through a lot of these things like that during this meeting. Click on the notification bell to get the latest video. Please do subscribe to the channel. It's growing really great. I do appreciate it. And until next time, everyone, please stay safe, stay on track, and take care. So long, everybody. Bye.